bigger picture things as we think about it. So looking at some specific crops here. So for canola, and we'll look at some graphs here right away that kind of illustrate this. But record large production last year in Canada. Okay, so a huge crop, huge yields. The export outlook has improved since January, since China has greatly reduced tariffs. But I would say that it's been a little underwhelming, maybe, from what sort of the hopes were early on. Crush outlook is positive. Okay, so we are crushing more than we ever have, and we'll continue. I think that number is going to continue to grow. We're going to have a pretty good carryout at the end of this current season, right? And that's kind of a bit of a dampening effect a bit here. But I think we do get a little bit tighter next year. But the thing with canola is it is literally like ground zero for every policy uncertainty that's out there. Whether it's biofuels in Canada, the U.S., trade, China, the U.S., like canola is kind of like ground zero for all of it. And so you end up having a pretty wide range of potential outcomes with a potential for a shock. In the case of canola, again, we can't predict that. We can't predict what Trump's going to do or whatever with trade in summer, but we'll sink our teeth into what we actually can, get our heads around here. So this is a graph of Canadian canola production last year, and just kind of illustrate the bars are the actual production. The line is yields, record yield last year. Okay, so we grew a big crop. By the way, one of the reasons that everyone was ticked off at China about exports have fallen, rightfully so. Look at some graphs here in a minute on that. But one of the things we have to remember that part of the reason, no small part of the reason that canola prices were kind of like lagging is because we grew one heck of a big crop. Okay, and so there's just a lot of canola around as well. So prices would have been under some pressure regardless. Obviously, not moving exports to China in any meaningful volume in the fall was brutal. But we also had a lot of canola at the outset. The other part, this is a graph of canola production just sort of across the major countries. So Canada, the U.S., Australia, the EU. Everyone had a big crop last year, right? So we had a huge crop, the EU had a bigger crop, Australia had a big crop, Russia had a big crop, right? So globally there was a lot of canola and rapeseed production as well. So again, we think about, kind of the price effects and what does that mean? We just simply, there's just simply a lot of canola and rapeseed around globally. And, and then we think previously, okay, also record large soybean production and that sort of thing. And, lo and behold, we had a canola market that for certainly for quite a while was probably a little disappointing, maybe for lack of a better term. Okay, so this is a graph of Canadian canola demand, and just a couple things I think in particular, just to kind of point out here. So the red bars on the bottom is our domestic crush. Okay, so just to kind of show how that crush has been growing year after year. And man, has that ever been a good story for the Canadian canola industry. Like imagine, some of the challenges we would have had with canola prices and demand if, for example, we were only crushing as much canola as we did 2-3 years ago. There'd be like another, million odd tons we got to try and find a home for. So the fact that we're actually crushing so much canola here in Western Canada, just a tremendous story, and has really, quite frankly, kind of saved our bacon in a lot of ways. And we think that's going to continue to grow. Okay, so that's a real good news story. So this year we have 12.2 million tons penciled in. Last year I think it was 11.4. I think we'll do about 13.4 million tons next year, right? So it's just kind of going, growing every year. Again, great story. Part of the reason we are actually optimistic about canola prices. The yellow portion of that is exports. And, that's going to get squeezed a little bit, although partially next year. The reason it's going to get squeezed is because I don't think we'll actually be able to export that much more canola because, I'm not sure that the supplies are there, to be honest. And we'll take a look at that. That hopefully helps that make sense. So this is a graph of canola exports in the current season, right? And sort of cumulatively. And so you can see, the red line at the bottom is what we've exported so far this year. This is weekly CGC data. The dashed line is kind of the 5-year average. The blue line is what we did last year. And so exports are simply lagging, right? And again, well, that's not rocket science. I mean, China was our biggest customer by far. And they basically bought very little as long as tariffs were in place. Okay, and so the canola is just not moving, right? And I mean, it's starting to pick up a little bit. It has improved, but it's still like way behind what we typically would get, right? So why do basis levels stink so bad? Well, quite frankly, because the exporters just didn't have a lot of action going on, especially earlier on in the year. And the thing with China is, so over the previous few years, they were taking like anywhere from 50 to 70+% of our exports, right? So now that number drops down almost zero. Like that's a huge, huge demand hole to try and fill. And those exports typically were kind of front-end loaded, so it happened through the fall and early winter when you guys are trying to move canola because it's after harvest, you got to get that stuff moving. Got this big demand hole, and again, that's why basis levels stink and prices were kind of pretty ho-hum for a while. So again, for reasons we'll look at in the second year, I'd like to think that China's going to come in and buy a whole whack of it, but I'm just not sure, right? Again, we don't have export sales reporting in Canada, so we don't know what kind of export sales are on the books, like they do in the U.S. I don't know, the signs show that, no doubt China's buying some, but I don't know, there's a lot of banging of pots and pans and fanfare when we did this deal with China, and again, they are buying, but I'm just, the signs aren't there that they're buying huge, huge volumes. So we'll see. But I mean, we still got some time ahead. This is Canadian canola crush by month. And so sort of the black line with the yellow circles is the current crop year. Again, month after month, we're just crushing more than we ever have before. Okay, and again, I think that trend's going to continue. I think we've got this Regina plant coming online in spring, stuff like that. Other existing plants that have expanded and that sort of thing. So again, just really a good news story on the demand side is the crush volumes. So this is a graph of Canadian canola acres. So last week, StatsCan came out with an acreage estimate of about 21.8 million, which is roughly flat from last year. They're too low. Like I think farmers in Western Canada are going to plant probably, our guess is 22.5 million, which would be not quite a record, but the highest it's about 2017, 18. Okay, and so you guys are the ones that put it in the ground. You can tell me if I'm wrong, but I think our guess is that farmers will put a little bit more canola in the ground in Western Canada this year. So I think StatsCan is a little light on their number. But we might actually grow less canola next year if we have, call it normal / average yields, just because last year, we blew the doors off on yields, right? And so if we actually have, let's call it normal-ish yields, whatever exactly that means, even with the higher seeded acres, we have a lower crop, and if we're crushing more canola next year, which we expect, we actually think we could have a bit of a tighter canola S&D next year. So this is a graph of canola carryout. And so in the current year, which is kind of that second last bar, pretty comfortable. And I think prices, basis levels, stuff like that are telling, futures prices, we'll look at futures prices in a second. Those things have been, having a little mojo here lately. But basis levels, stuff like that are showing that we have a pretty good carryout. Which, again, prior to this latest run-up in bean oil, we'll look at that in a second, prices were kind of a little bit uninspiring, and this is, assuming that China kind of, steps up here a little bit. But next year, I think it's pretty tight. Again, yields will kind of tell that story, but if we have average yields, even with the bigger acres, it's not negative for canola as we look forward. So this is a graph of canola futures. Again, this is going back probably the last several years. And just to kind of show just the move that we've had, like we've had a heck of a run up here since early December, and so again, it's we're pumping up against some resistance. I think we have a bit of an overshoot here. Okay, so I'm a little cautious about prices pulling back here in the interim. So I'm kind of a little bit negative in the interim because I think we're sort of tracking all these events that are going on. But as we look further out, again, not negative. As we look for bigger demand, and again we'll see what yields are. But just to kind of speak to my point, to illustrate a little bit, this is a graph of canola and soy oil futures since about mid-December. Okay, so this isn't like a long-term graph. This is just a graph for the last couple of few months or whatever. Like you can't tell the difference between the two. Okay, and I guess the reason why I share that is, as much as we've had a run-up in canola prices, I don't think this is a, Carney, EV, China, canola, yay story or whatever like that. I think the China impact on canola prices is pretty minimal in my view. This is a soy oil story, which is driving our canola futures higher, which has been great because soy oil has been moving higher, and of course, especially as the crude oil market has run up and that sort of thing. Also makes us a little bit vulnerable if the soy oil market also is overshooting a little bit, which I'm a little cautious that it is. So for with biofuel and all that stuff, longer term, I think that's a good story, but sometimes we can tip over the skis a little bit. So I'm a little wary of a correction in soy oil. That potentially sees us, get hit on the canola in the interim. So I'm very cautious about where we at in the interim with canola prices, which is, whether you're trying to get some stuff done for new crop early, whether you got some stuff sitting in the bin. Futures prices I'm a little wary of. I think there's other factors that have kind of caused us to overshoot a bit. Again, doesn't make me long-term negative canola prices. This is a graph of basis levels, and again, for canola, the dark line is old crop basis levels. They've generally improved a bit, and again, you guys are on the ground closer to it than we are, but this is an average across Western Canada. They have improved off the lows a bit, but they're still kind of meh, by and large, I think, on average. Again, it maybe varies. The yellow line is basis levels for fall delivery. I probably don't have to tell you guys that. Boy, they're really poor too, aren't they? And I think that's just, companies there's so much uncertainty going forward with China, with US, all that sort of thing. And so really wide basis levels here for canola. By the way, almost like textbook hedge. If someone has a hedging account, I don't know if folks have hedging account, but like a textbook setup to protect that futures price. But I don't know if I'd be locking in too much basis levels here for new crop. Varies by location, so I can't make that as an unqualified statement across the board. That does vary by location and what you guys got to do in your farms. But in general, basis levels are really poor. Okay, so just to kind of summarize a couple comments here. Again, that outlook has improved in our view since early winter. As China, they are buying more canola. I just don't know that they're going to be buying enough from what early expectations and hopes are. And again, there's no export sales reporting. I don't sit around the desk at Cargill or Richardson or P&H or folks like that. So I just look, see the data in terms of basis levels, market behavior, and it would suggest that a measured outlook would be the right one for their for their demand. We are going to have the longer term outlook, as I mentioned, is supportive, as already said. But again, just a wide range of outcomes potentially for canola, because there's so much politics that is going to drive that, and so that that's something to just be wary of. There are external policy shocks. Some of them might be positive, but they also potentially could be negative, and that's just something to be mindful of. So in terms of wheat, and again, there's some